Before we deconstruct the brutal algorithmic financial trap currently devastating independent professionals across the United Arab Emirates, I have exactly 3 critical questions for you to answer in the comments below. Number 1. Did you recently purchase a budget freelance permit in Dubai, completely unaware that the advertised price excluded the mandatory immigration files, medical test and establishment cards required to actually live here? Number 2. Are you operating your digital nomad business under the assumption that the UAE is entirely tax-free, ignoring the strict 2026 corporate tax threshold and devastating AED 10,000 dirhams late registration penalties? Number 3. Have you mapped out your exact financial exposure to the new nationwide mandatory health insurance law that will instantly block your visa renewal if you fail to comply? Let me know your answer. If you are new to the channel, here is my intro. I am Dr. HR. I approach the global labor and capital market not with emotional comforting advice, but as a structural algorithmic system. I hold a PhD in Human Resources, a Master's from prestigious Tata Institute of Social Sciences (TISS) in Mumbai, and a Bachelor's in Computer Engineering. Operating on the ground here in Dubai since 2010, consulting for Tier 1 corporate entities, sovereign wealth funds, and apex tech founders across the Middle East and Indian subcontinent, I have monitored exactly how global talent is sourced, leveraged, and heavily taxed. The market does not reward you for chasing a lifestyle aesthetic. It rewards you for structural financial compliance. You think a freelance visa is your golden ticket to freedom, but for the most expat, it's a financial time bomb waiting to explode. By the time you realize that the true cost of hidden renewals and mandatory health levies, your savings could already be gone. Don't let your dream move become a nightmare. Everyone talks about the digital nomad lifestyle, but nobody mentioned the brutal success tax hidden in your visa fine print. While you are focused on the beach, secret administrative fee, and shifting tax residency laws are quietly draining your bank account. Here is the expensive truth your visa agent isn't telling you. What if the very visa that gave you freedom is actually the biggest threat to your financial future? There is one specific overlooked clause in freelance regulations that is currently costing expats thousands of dollars in unexpected penalties this year. If you don't account for this now, it will be too late. Before I completely dismantle the illusion of cheap freelance setup, expose the exact mechanics of the 2026 corporate tax compliance grid, and give you the precise architectural blueprint to protect your capital from administrative decay, hit the subscribe button and press the notification bell. I post daily videos showing you exactly how to navigate the global labor and capital market using cold, hard engineering logic. You do not want to miss these execution protocols. Stop buying into the marketing brochures. Start auditing your liabilities. Grab a notebook. It is time to engineer your financial survival. Phase 1. The permit versus residency trap, the illusion of cost. We must first diagnose the exact debilitating marketing illusion that draws thousands of high agency professionals into financial black hole. You sit in London, Mumbai, or Berlin and you see a highly targeted digital advertisement. Start your Dubai freelance career for only AED 7,500. You calculate the exchange rate, realize it is a fraction of the cost of setting up a limited liability company in Europe, and you wire the capital. You believe you have purchased your residency. You have walked blindly into the permit trap. The amateur expats fails to understand the absolute legal distinction between a freelance permit and a residency visa. When an agency or a free zone sells you AED 7,500 dirham package, they are selling you the license to work. They are not selling you the right to live, rent an apartment, or open a bank account in the UAE. To actually exist into this ecosystem, you must navigate the secondary hidden layer of the immigration matrix. Let us run the actual mathematical physics of your Year 1 extraction, the establishment card. To sponsor your own visa, your freelance permit must be registered with the immigration authorities. This mandatory establishment card cost approximately AED 2,000 dirhams. The entry permit and status change. Activating your presence inside the country requires an entry permit and a status change, extracting another AED 1000 to 1500. Medical fitness and biometric. You cannot bypass the biological screening, medical test, fingerprinting, and mandatory Emirates ID registration will extract an additional AED 1000 plus. The visa stamping. The actual stamping of your residency cost another AED 300 to AED 500. The budget AED 7500 permit you to celebrate it has mathematically escalated to an absolute baseline of AED 12,000 to AED 15,000 within the first 30 days. The issue is not that the UAE is fundamentally overpriced. The issue is the incomplete disclosure by aggressive sales agent preying on your desire for a geographical freedom. When you budget for the aesthetic instead of architecture, your operational runway collapses before you even secure your first local client. Phase 2, the mandatory health levy, the biological tax. We must now introduce the second layer of financial time bomb. Historically, digital nomads moving to the Northern Emirates believed they could bypass the strict insurance laws of Dubai and Abu Dhabi. They relied on cheap international travel insurance or simply operated entirely uninsured. In the 2025-2026 regulatory framework, that loophole has been violently permanently closed. We have entered the era of mandatory health levy. The UAE has fully implemented universal health insurance mandates across all 7 Emirates. Whether you are registered in Sharjah Media City, Sams, Rakeez, or Dubai Internet City, you're legally bound to a rigid biological tax. If you do not possess a compliant localized health insurance policy, the General Directorate of Residency and Foreign Affairs (GDFRA) and the Federal Authority of Identity, Citizenship, Customs and Port Security (ICP) will algorithmically block your visa issuance and your future renewals. The amateur assumes they can buy a basic AED 600 policy to tick the box. This is a severe miscalculation. While basic plans exist, independent freelancers are classified as their own sponsors. Depending on your age, marital status, and desired coverage tier, a standard DHA-compliant or federal-compliant health insurance policy will extract an additional AED 1200 to AED 4500 annually from your balance sheet. If you attempt to delay this purchase, or if your insurance lapses during a renewal window, the system does not offer a grace period. It generates an automated fine. A consultant I recently audited assumed a 1-month grace period applied to their insurance renewal. It did not. The resulting penalties, late fee, and reprocessing cost extracted an unexpected AED 2000 instantly. You are not just paying for visa, you are funding a comprehensive, highly regulated biological ecosystem. If your side hustle or freelance revenue cannot absorb an immediate AED 4000 annual health levy, your golden ticket is structurally bankrupt. Phase 3, the 2026 corporate tax matrix, the contrarian reality check. We now reach the most lethal component of Expat freelance illusion. The primary marketing vector for relocating to Dubai has always been the phrase of 100% tax-free. If you're operating under the assumption in 2026, you're operating in a historical hallucination. The UAE introduced a federal corporate tax, and enforcement has matured aggressively. The system is designed to integrate the UAE into the global financial regulatory grid, and it applies directly to the individuals conducting licensed freelance business activity. This is a brutal success tax. If your freelance revenue, your gross invoiced amount, not your profit, exceeds 1 million dirham in a calendar year, you're legally mandated to register for corporate tax with Federal Authorities of Tax, which is the FTA. The amateur believes that because their profit is low, they do not need to register. This is a fatal flaw. The AED 1 million threshold is triggered by turnover. If you bill AED 1.2 million to clients, but your expense are AED 900,000, your profit is only 300,000. However, because your total billing crossed the 7-figure threshold, you must register. If you crossed this threshold in 2025 and missed the March 31, 2026 registration deadline, the FTA does not send a polite warning. The system executes an automatic, non-negotiable AED 10,000 dirhams late registration penalty. Once registered, the math shifts to your net profit. The first AED 370,000 of your annual profit is taxed at 0%. Every single dirham of profit above AED 375,000 dirhams is taxed at 9%. While you are posting photos from a beach club of Palm Jumeirah, the algorithmic tax grid is silently auditing your bank inflow. If you do not possess an airtight bookkeeping structure, separating your personal grocery expenses from your legitimate, wholly and exclusively incurred business expense, the FTA will disallow your deduction and artificially inflate your taxable profit, and triggering a massive 9% liability. The era of messy spreadsheet accounting is over. You must now budget an additional AED 3,000 to AED 5,000 annually simply to pay a certified accountant to maintain your ledgers for a mandated 7-year retention period. Phase 4, the curiosity gap, the overlooked SBR clause. What if the very visa that gave you freedom is actually the biggest threat to your financial future? There is one specific overlooked clause in the freelance regulations that is currently costing expats thousands of dollars in unexpected penalties this year. It is the illusion of automatic immunity. We must decode the small business relief, the SBR trap. The UAE government, recognizing the burden on independent operators, designed a massive financial shield called the Small Business Relief. Under this clause, if your annual freelance revenue is below AED 3 million, you can elect to be treated as having a zero taxable income, even if your actual net profit wildly exceeds the AED 375,000 threshold. It sounds like a perfect loophole, but here is an expensive truth your visa agent isn't telling you. It is the automatic. Thousands of freelancers in 2026 are assuming that because their revenue is under 83 million, they can simply ignore the Emara tax portal. They assume the government will automatically apply the 0% rate. This is the trap. To utilize small business relief, you must formally register as a corporate tax, secure a tax registration number, the TRN, file a complete annual tax return, and explicitly manually elect the SBR option within the portal. If you fail to register, you incur the AED 10,000 dirhams penalty. If you fail to file the return and explicitly tick the SBR box, the FTA algorithm will default to the standard tax code. If your profit was AED 600,000, the system will assume you owe 9% of AED 225,000 that sits above the threshold. You will suddenly receive a tax bill of AED 20,250 simply because you failed to click a single compliance button. You cannot ignore the administrative matrix. If you don't account for this specific operational sequence now, it will be too late. You will hand over a massive percentage of your sovereign wealth purely due to administrative negligence. Phase 5, the algorithmic renewal cycle, the compounding drain. The financial bleeding does not end at the initial setup or a tax filing. The freelance visa is a recurring subscription to a highly regulated sovereign state. You must understand the physics of the algorithmic renewal cycle. The amateur expats budget for their year 1 cost, exhaust their savings to get established, and assume their financial obligations are over. 12 months later, the system comes to collect again. If you purchased a 1-year permit only package, you must renew the work permit. If you purchased a 1-year or a 2-year residency package, you must renew the visa, the Emirates ID, the establishment card, and the mandatory health insurance. The average annual renewal cost for a fully compliant freelance setup in Dubai ranges between AED 7,000 to AED 12,000. If your freelance business suffers a dry spell in month 11, you are mathematically trapped. If you cannot afford the renewal, your visa expires. If your visa expires, your Emirates ID is deactivated. The moment your Emirates ID is deactivated, your corporate and personal bank accounts are algorithmic, frozen by the UAE Central Bank Compliance Protocol. You cannot access your own capital. You cannot pay the rent, and you begin accumulating daily overstay fine from GDFR. This is not a digital nomad playground. It is a high-stake corporate arena. You must adopt the mindset of a sovereign operator. A sovereign operator does not live month to month. They architect a financial firewall. The execution blueprint. 1. The gross to the net buffer. Never launch a freelance visa if your liquid capital perfectly matches the advertised price. You will possess a minimum of 2.5x the advertised permit cost in liquid cash to absorb the establishment card, biometric, health insurance, and inevitable administrative friction. 2. The accounting architecture. Do not mix your personal and business capital. Open a dedicated freelance banking node like Vio Business or Mushrek Neo. Route 15% of every single invoice into a locked sub-account specifically designated for your annual renewal and potential tax liability. 3. The value stream upgrade. Stop selling low-ticket freelance services. If your baseline operational cost to legally exit in the UAE is AED 15,000 a year, you cannot survive selling a $50 logos on Fiverr. You must scale your value proposition. You must target high-yield enterprise client in the DIFC or ADGM, utilizing your legal compliant status as leverage to charge massive premium retainers. Look closely at the marketing brochures selling you the tax-free dream. Look at your current accounting practices and deadline looming on the Imara tax portal. The UAE is the ultimate global accelerator for high agency talent. It offers unparalleled safety, infrastructure, and access to extreme wealth. But it demands an absolute flawless compliance in return. Stop playing the amateur digital nomad. Audit your liability. Register your metric. Architect a financial structure that absorbs the hidden cost and transform your freelance permit into an unshakable sovereign empire. Process the data, execute the strategy, and I will see you at the top.